Okay, here's some of the things that I'm seeing in the market, and I'm going to use this little app called TradingView just to run through some quick charts. What I see in the Dow Jones is clearly that we've lost the 200-day moving average, which is starting to flatten out, and the 50-day moving average is moving down. But what I see in here, I can't point it out in the screen, so I'm going to draw it for you, is this cool little pattern. And that would be an A, B, C. I'm going to draw C a little bit lower, around 68. And then the D will be higher. But this pattern shows that if we move this B up to this one right here, we have a 68.4. That's a Gartley number from XA. Then it moves down to C. And that pattern is almost, well, right now, it's sitting at $73.2. So it's roughly 68%. So we've got a Gartley pattern followed by a Gartley retreat, which really calls for a move somewhere higher, D, that I haven't drawn, but we're really just looking for direction. So that would be somewhat higher. Now the NASDAQ, on the other hand, the 50 is about to cross over the 200. That's clearly a bearish sign. That's not very good. If we look out a little bit longer, we could draw a Fibonacci here and see what kind of pullback we've had on this big move up. But losing the 200 and seeing that death cross is not really a good thing. The S&P, meanwhile, saying the same thing. We're seeing the 50 starting to come down, the 200 flattening out. You might even see that, probably see that same Gartley pattern in here. The volatility index is in between these high and low points. Sorry about that. Sorry about that again. And now you've got the trend, which is really spiked up there, and that's really a very bearish number. But remember, we're going into a 3-day, we are in a 3-day weekend, and you've got the tensions in the Ukraine, and nobody was very bullish on the Friday before a 3-day Ukrainian invasion weekend. Apple has lost the 50. After fighting to keep the 50 for 1, 2, 3, 4, 5 days, it lost the 50 a little bit. So that's a bit of a disturbing sign. But look at the volume. The volume increased in the last 3 days, but not in an alarming sense. You can see the days where it's above its volume moving average. Those were more of a concern, and that's where we hit this this low and then started to move up. So Apple is in a place where it could possibly rebound. This is the little biotech stock I've been following. I'm not going to bother talking about that one. Block has been really, really hugely disappointing. If Kathy Woods hadn't bought $1 million of it, I'd be really worried. But look where it's coming down to in terms of where it's been at $25. Fibonacci's would be something really worth drawing here, just to see what kind of a pullback we've had. But it's a little bit tough to do on this small screen. Caterpillar. Now, in Caterpillar, I did draw a Fibonacci from the COVID low to its high and found support at 61.8, then a move higher, and then now coming down, and I think it's going to test that low again of 187.12, and that would be the 61.8. And a double test of that line should be, a signal to dip in a little bit and maybe see a bounce. I'm going to forget about NEO. Looking at the bank sector, Royal Bank is always a good one to follow. And, that's got a 4-point-something% dividend. And those Fibonacci's are pretty tight. Abbott is just on a tear higher. IBM has done a bit of a pullback, but you can see there that we've got a double test of this spike down. So we've got a double low. That's suitable for a bounce. Look at the 50 and the 200. Unlike other charts where we saw the 200 flattening out and the 50 moving down, here we saw the 50 trying to break through the 200, and that would have been bullish, and then it just tailed off a little bit. So don't give up on IBM yet. It's an opportunity to buy a little bit on Tuesday morning, because you do have this, if it pops up, because you do have this double bottom, and if it falls below this 124.35 point, then you want to get out. AT&T is flattening out. I think the news has sort of worn itself out. Everybody now knows how the split is going to happen between AT&T and its spin-off to Discovery, what the stock will be worth at that time, how many shares of the Discovery you're going to get, and what your subsequent dividend will be. There's U.S. Bank. I'm not going to look at Rivian too much. There's J.P. Morgan. Again, we're looking at the banks, and we see the 200 was resistance, and now we've lost the 50. So now we want to see J.P. Morgan come and overtake that 50 again, but the 200 is going to be tough to beat. Anything else that we want to take a look at? Look at gold. Wow, gold is certainly on a move up. Let's take a look at gold from a longer point of view. I mean, gold has certainly been higher, but people who have gold are happy. Peter Schiller and all those people who've been talking about gold since these days are now saying, see, I told you so. Yeah, right. Pfizer. Pfizer's got an interesting pullback just to below the previous peaks where you've got a high, then a higher high. Look for the support on the 200-day moving average for Pfizer. Coca-Cola making new highs. That's been a stock that I had and then got out of because the dividend just wasn't interesting. Now it's starting to move a little bit higher. It's not a stock that I'm particularly interested in. Walmart, of course, had the big day on Thursday and is starting to show some life, but it's got a bit of a ways to go. That's a really choppy ride. Home Depot, support on the 200, but more importantly, twice now support on the 200. So we didn't get the bounce on the first time it hit the 200, or the second time, or the third time, and then yesterday, Friday, we lost the 200. But again, don't worry about that. Nobody wants to be holding too much stock over the weekend. Expect a move back up to the 50, which is where, that blue line, which is where it's seen resistance up here once. And that's a little bit of a annoying thing about this program. There, we got rid of it. And the 50 was resistance back here. You can see right in... never mind. Whirlpool, not interested. Ford, stuck between the 50 resistance and the 200 for support. Probably not going to do too much in the near future. CVS, hanging on to the 50. It's had one bounce on the 50, you can see to the left. Now go back to your left again, down, follow the candles, and you can see support on the 50. So CVS, if it bounces off the 50, there's a stock to buy. Remember when we were following CVS at $75 and $80? Now it's up to 102. J&J, and then we're back to the Dow Jones. This is the one that I'm most interested in. I want to see if this Gartley pattern is going to work itself out. So happy trading next week. It was fun working with TradingView. Really cool, free program for the iPhone or the iPad. You can upgrade to a ton of additional features. It's an awesome, probably the best charting program out there for mobile traders.